3 stocks, the May 2019 edition. Let's get started. What's up, everybody? My name is Ala and welcome to my world of stocks. I left timestamps for you down below in the comment section on a pinned comment. All I ask in return is that you please hit the like button. It really helps the channel a lot and it really means a lot to me. And in case you're new to the channel, this is the monthly series where I try to give you a bullish long-term thesis on 3 very different stocks every single month, and that is a very difficult thing to do. So please always do your own research and make your own decisions. I'm not telling anyone to buy or sell anything. I'm just trying to give you a kind of bullish opinion on some different stocks, and then if you find them interesting, then you can research them further and make your own decisions at that point. But I will just add that at the moment, I do feel that the market is pretty expensive, and I would like to see a nice little healthy correction or a little bit of a pullback before I kind of ramp up any buying. So right now my buying has been slowed down quite a bit. But I do think that there are some pretty good stocks internationally. So today, first stock is going to be a European dividend stock. It's a big pharmaceutical company. Stock number 2 is going to be, we're going to fly over to China and we're going to look at a high growth tech stock out there. And then we're going to fly back to Europe for stock number 3. And we're going to look at another dividend stock that is also a pretty good play on the 5G kind of market or revolution or whatever you want to call it. But these should be a lot of fun to look at. So let's go ahead and get started. Now, I'm probably going to pronounce all of these wrong, so feel free to correct me in the comment section. I know I have a lot of European viewers. Please don't get too angry. But stock number 1, company number 1 is Novartis, ticker symbol NVS. And this is a Swiss pharmaceutical company that hasn't been performing too well in recent history, and their stock hasn't been doing too well. And especially in April, they took a bit of a hit as well. But that made their dividend even more attractive, which is the reason why I decided to add it to my watch list. Now, as far as their business goes, just last year, they had 15 different blockbuster drugs on their hands. If you don't know what blockbuster status means, that just means that the drug generated over $1 billion in sales. On top of that, 7 of their top 20 drugs had double-digit sales growth last year, with the top 3 in growth being Cosentyx at 37%, Loris at 38%, and Entresto having explosive growth of over 100%. Now, Cosentyx is an immunosuppressant that blocks a certain protein in your body that causes inflammation and swelling. And so far, it's already generated almost $1 billion just in the 4th quarter alone. Now, I couldn't find their patent expiration date, but they got FDA approval back in 2015, and typically most drugs have patent protection for 7 to 12 years after that, so they should still have plenty of room to keep raking in those profits before generic competition starts to steal market share. Another drug that is doing extremely well is Entresto, which reached blockbuster status for the first time last year and grew sales by 103%. This is a heart failure medication, and it also got FDA approval back in 2015, just like Cosentyx, so they should both have plenty of time left in their patents. On top of that, 4 drugs in total reached blockbuster status last year. 3 new potential blockbuster drugs recently launched, and another 10 potential blockbusters are on track to launch by 2020. All of this is already leading to stronger performance as revenue climbed last year by 6%, net income surged by 64%, and free cash flow grew by double digits at 12%. And with the strong performance they've been seeing in recent history, the company decided to go on a shopping spree, already acquiring French drug maker Advanced Accelerator Applications in January of last year. Then they acquired a gene therapy biotech company called Avexis in April of last year, and they ended the year by acquiring a biotech company that does a lot of work in cancer treatment called Endocyte, and that was in December of last year. Still, despite all of the positivity, the stock recently took a hit, dropping by over 12% this month alone, erasing all the gains it made earlier in the year. By the way, they are also down in the past 5 years, but they have at least doubled in the past decade. In any case, the recent hit in April mostly coincides with 2 recent events. The first is a double lawsuit with Amgen over a partnership for one of their migraine drugs called Aimovig that was launched last year, and the drug is only predicted to do less than $1 billion in sales this year, but there are other estimates saying that it may become a blockbuster product soon after. Either way, we still have to wait and see how everything plays out, but it could potentially deliver a small sting to Novartis' top line. The other event that happened is that Novartis spun off their eye care business into a new publicly traded company called Alcon, which is famous for their surgical devices and over-the-counter consumer products like contact lenses and solutions. In total, Alcon had brought in over $7 billion in revenue last year, but existing shareholders of Novartis did receive at least one share of Alcon for every 5 shares that they owned of Novartis. So in any case, Novartis already brings in almost $52 billion in revenue a year, and the new spinoff allows them to focus and invest more heavily into their innovative medicine and generic drug businesses that have always been higher margins. So bulls would argue that they're okay with the recent changes. The drop also gives them a very nice dividend yield of 3.7%, and in their own currency, they've now increased that dividend for a massive 22 straight years since 1996, making this a pretty solid dividend stock as well. And then I'll just quickly mention their valuation. It has now dropped to a forward PE ratio of about 13, which isn't too bad. In any case, Novartis remains a very interesting stock to watch, and I think the recent lawsuit and the spinoff are mostly short-term concerns or issues, but the real story in the long term is if these newer products do become blockbuster hits like management is predicting, which if they do, then this could potentially turn into a pretty nice dividend stock for the long term. But in the short term, the stock remains a little volatile, a little unstable. So I'd like to get a little bit of a bigger discount before I'd be willing to buy a stock like this. It's also an international pharmaceutical, which is not really what I typically invest in, but if that's your area of expertise, then you may want to research it further. I know that they're going to have an earnings coming up here soon, so if earnings goes bad, then you could potentially get an even bigger discount. That might be even more appealing for that pretty nice dividend. All right, guys, moving on to stock number 2, we're gonna fly over to China now, and we're gonna take a look at a high growth tech stock. Now, we typically talk a lot about these Chinese stocks, very popular ones like Alibaba, JD, Tencent. We also talk a lot about NIO on the channel, but one that we've never talked about on the channel is Baozun, ticker symbol BZUN, and again, this is a high growth tech stock out there in China. Now, if you've never heard of them, they're an e-commerce company based in China, and while they do have branches in other parts of the world, most of their business is focused primarily on China. Now, you might be thinking that we already have too many e-commerce companies in the world, but I 100% disagree, since the market is enormous and it still has a ton of room to keep growing in the future, but we'll take a look at that a little bit later in the video. Also, you have to keep in mind that Baozun is not a competitor to something like Alibaba or JD.com. In fact, those are its actual business partners, not to mention that Alibaba even owns about 16% of the company. See, Baozun offers IT solutions and services, helps with store operations, digital marketing, customer services, warehousing, and even fulfillment to e-commerce companies. More specifically, they help companies develop their online stores and fulfill their orders. They even offer services that involve the megatrend buzzwords like cloud computing, big data, and artificial intelligence. This includes helping businesses sell their products on Alibaba's famous Tmall website, JD's JD.com website, and they even help with Tencent's WeChat mobile application, which is a multi-purpose messaging, social media, and mobile payments application. So the list really ranges out to include large e-commerce platforms, social media shopping platforms, official stores for individual brands, and they even help with offline smart stores, which we all know is a big new trend that Alibaba has been recently pushing, which they refer to as new retail. So just kind of in the general sense, Baozun kind of helps these different companies set up shop online. Basically, if you want to start selling your products online in China, Baozun is your kind of one-stop shop to kind of get you all set up. By the way, their e-logistics subsidiary called Baozun is one of their biggest assets, as it promises over 99% inventory accuracy with over 99% of online orders to process and be delivered on time. Their customer service offerings also include over 1,000 customer service staff. They cover 5 major cities and they offer multilingual support. Their IT division also houses over 400 engineers, offering a wide variety of tools and services for their different customers. And Baozun has now partnered with over 150 different international and domestic brands, covering a wide variety of categories, with just a few examples including helping Microsoft set up shop on WeChat, BYD set up their own e-commerce system, and Brita set up shop on Tmall. All of this has led to many people referring to Baozun as the sort of Shopify of China, a reasonable comparison considering the enormous growth that Baozun has been experiencing lately. The revenues have now climbed from $400 million in 2015 to $786 million in 2018, representing growth of 22% in 2016, 30% in 2017, 23% in 2018, and a compound annual growth rate of over 25%. Profits have also been impressive, with net income climbing from just $3.5 million in 2015 to almost $40 million just a few years later, with growth rates of over 250% in 2016, over 150% in 2017, and still over 22% in 2018, with a compound annual growth rate of over 120%. That is pretty darn impressive. And all of this has led to pretty strong performance for the stock as well, which is now up over 622% in just the past 3 years. Thankfully though, the stock took a pretty big hit with the rest of the Chinese market in the second half of last year, leaving them down about 13% in the past year and down close to 40% from their 52-week high. Still, just like many other Chinese stocks at this time, Baozun has seen a monstrous recovery so far in 2019, up over 40% year to date, and now trading for around $41 a share. So it would have been really nice to have picked up Baozun kind of like towards the end of last year when everybody was screaming that we were going to have the biggest market crash in history and all that kind of stuff. But anyway, when looking at their valuation, their trailing PE is extremely high, but thanks to their enormous growth, it does shrink all the way down to less than 19 for their forward PE. By the way, I would ignore that huge PEG ratio, as Yahoo Finance can sometimes get some of these figures messed up if they don't have enough analysts to give them estimates. But when looking at simply Wall Street, they put their PEG at a much more reasonable range of about 1.4. In any case, I do think that there is still a lot of future potential for Baozun, given that the global e-commerce market as a whole is still in its infancy, as it accounted for less than 12% of all retail last year, and even by 2021, it's still expected to be less than 18%. Keep in mind that this market is projected to be worth over $3 trillion already, and almost $5 trillion by 2021. And as all of these traditional brick and mortar retailers and brands try to expand their portfolios into online shopping websites, Baozun will be there to help them with everything they need. And having most of their business in China isn't really a concern for me either, as it is already the biggest e-commerce market in the world. It's projected to hit over $1 trillion sooner than any other country out there, and it has the highest 5-year growth rate of any major competitor. So as more and more brands and companies try to tap into this enormous and growing market in China, they'll likely need to hire Baozun to help them manage their systems and everything that just kind of goes along with it. So overall, I think Baozun is a Chinese stock that doesn't get nearly enough credit, and just a company in general. Usually we're talking about Alibaba, JD, we're talking about Tencent. Obviously we talk a lot about NIO on this channel as well, which, by the way, let me just clarify one quick thing about NIO, because I've been receiving some comments lately from people saying things that like are just completely false. They're saying things that like NIO is my #1 largest stock and all these kind of crazy things. I just want to set the record straight. NIO is my spec stock, which means it is the smallest stock in my entire portfolio. It is a very, very small position relative to the rest of my portfolio. So it's completely fine if anybody wants to call me out on the different stocks I own, but the biggest stocks I own is like Disney, Microsoft, I own Amazon, I own a lot of AT&T, I own a lot of Alibaba. You're much more credible to call me out on those stocks, but calling me out on something like NIO is kind of ridiculous. But anyway, I know this is off topic, but I've just been getting a lot of idiot comments from people that are just trolling and trying to get under my skin with NIO, because obviously NIO is struggling a lot. I almost included NIO in today's video, by the way, because I do think it's at a pretty attractive price right now, but that's just my opinion. Anyway, Baozun, I think it's a very underappreciated, underrated stock, and it is one that I continue to track very closely. It is up quite a bit in 2019, which in my opinion is a bummer, because I would have loved to have picked it up like at the end of 2018. I wish I would have, but it's a little late for me now. I'm hoping that it kind of pulls back a little bit, but we'll have to wait and see. All right, guys, now moving on to the last and final stock for today's video. We're going to go with a 5G company. Now, everybody talks about a lot of the big ones like Verizon, AT&T. I'm actually invested in AT&T myself. It's one of my biggest stocks. Talk a lot about Apple, talk a lot about Qualcomm, maybe Skyworks Solutions, a few other companies as well. But a lot of you have been asking me to talk about Ericsson and Nokia, which are like a lot less known out there. And so I decided to go with one of those two for today's video. Now, don't get me wrong, Ericsson looks like a pretty decent play on 5G. It's one of those kind of cheap stocks, which is one of the reasons people like it. Also Nokia. But I decided to go with Nokia because they have a very nice dividend. Actually, I was very surprised. I'm just going to be honest with you guys. I never knew that Nokia had such a nice dividend. So for today's video, we're going to look at Nokia. By the way, ticker symbol NOK. Now, when looking at the company, Nokia is based out of Finland, but they're really a global company that focuses a lot on telecom technologies and IT services. They're also a pretty big play on cloud computing, the Internet of Things, and of course, who can forget 5G technology. In fact, they already have 30 commercial 5G contracts and almost 100 different partnerships, which that just kind of means that they've worked with these companies and probably continue to work with them, with a variety of large companies, including long-term contracts with AT&T, Sprint, T-Mobile, and US Cellular. Those are pretty big in the US. But they've also partnered with Verizon, who will probably be the leader in 5G technologies or services here in the United States, followed closely by things like AT&T and T-Mobile. And the partnerships continue across the globe with even more international countries and companies. Needless to say, the future of 5G is likely to bring positive results to Nokia, as they not only provided guidance for 2019 in their fiscal 2018 results, but they even extended it all the way to 2020, stating that even though adjusted EPS dropped in 2018 to 23 euro cents, which by the way, I don't know if euro cents is the correct term, but I don't know how to say cents for euros, but it dropped to 23 euro cents, but it is still expected to climb to 27 cents this year, and even more so in 2020, all the way up to 40 cents at the midpoint of their ranges. That would represent growth of over 17% this year and almost 50% in 2020, with a CAGR of over 30%. That's a huge deal, considering that they're aiming to pay out their dividends for as much as 40 to 70% of those estimates. Keep in mind that their dividend is already extremely appealing at about 3.8% and has a 4-year average of about 4%, very closer to 4%. And if the information on Seeking Alpha is correct, that yield has seen some much higher percentages throughout its history, and even at its lowest points, it was still hovering around 3 to 4%, sometimes 5%, and sometimes even higher than that. The dividend has also been paid out since the 90s, so they do have a pretty decent history of returning profits to shareholders. Now, taking a closer look at the stock, we can see that they're actually down in the past 5 years by almost 20%, which isn't really a good sign, and they've remained a bit volatile ever since, still down 2.5% in the past year and about flat year to date. But they currently trade around the midpoint of their 52-week range at less than $6 a share, and the weak performance has left them with a pretty decent valuation of just a 13 forward PE ratio and a PEG ratio of less than 1 because, again, of that expected future earnings growth. And before I wrap up here, I'll just quickly mention that Nokia even creates their own computing chips, their own smartphones, and on top of all of the services that they offer, they also own an enormous number of patents that range from technologies in GSM, 3G radio, and 4G LTE to Wi-Fi video standards, and they're also pushing to control a significant share of 5G patents as well, all of which should bring recurring revenues for the company for a long time to come. Just 2017 alone, they had filed patents on over 1,300 new inventions. So if management is to be trusted and 5G really brings them all of this earnings growth that they're projecting, then this could turn into a very nice dividend stock that is also a pretty good play on the 5G kind of market and all the 5G growth out there. Now, I will just quickly mention that management also mentioned that they will probably not see great results in the first half of 2019. I think they already released their first quarter and it wasn't that great either, but they said that growth will be coming in the second half of 2019 and into 2020. So we should see some pretty explosive results more towards that side. So I'm kind of waiting to see what happens more so towards the end of 2019 into 2020. And if there is a significant dip at any point, Nokia is actually looking pretty attractive to me, especially with that dividend. Oh man, you guys are gonna laugh at me. So, okay, what you're seeing right now is separate from everything that you've already seen in this video. And the reason why is because I was editing my video and I'm editing it and I'm like, where's the ending? I'm like, what the hell? Where the hell is the ending? And I couldn't find it. And I realized that I never recorded the ending. I just stopped on the last stock and I stopped recording. In my defense, I'm taking medication for like stomach ulcers and It makes me feel kind of woozy, but I can't prove that it's the medication. But that's my defense, and I'm sticking to it. That's the reason why I'm an idiot, and I forgot to record the ending. But I want to say thank you for watching the video. Please consider hitting the like button. Considering now that I'm recording this at like 3 in the morning, I think I deserve a like. So please hit the like button if you enjoyed the video, and I'll catch you guys in the next one. Leave your comments and thoughts down below. Take care. Bye-bye.